Welcome, welcome, welcome. Happy Friday, everybody. This is Dominique Henderson, the founder of DJH Capital Management, and welcome to another installment of Office Hours, where we are basically trying to help you accelerate your financial plan. If you have issues, if you have, let's say, questions, things of that nature, you're gonna want to hit the DM down below, or just comment in this thread. Always happy to lend a hand if I can, but this is all about helping you with about 5 minutes of financial strategy from the vault that we have up here. That's the big shiny dome of things that I think can really help you. And we started last week with something called uncovering your portfolio's total return, right? The components of that. So we talked about last week, delta, if you remember, and this was the change in price or change in value that your portfolio has based on you buy something at, let's say, 10 and it goes up to 11 or it goes down to 9. That is the change in value or the change in price. Now, the conclusion to that, if you remember, was what? That it's not that controllable, right? You have no control over whether or not the price goes up or goes down. Now, there is a component of you doing some research and hopefully the things will go up. But for the most part, as I told you, the last 100 years, the stock market's returned something between 8 and 10%. The bond market somewhere between 3 and 4%. So, you're going to get somewhere between a 6 to 8% return, predictably, if you will, with the 60 to 40% or a 60-40 mix of portfolio in your portfolio, 60% equities, 40% bonds. So that part of the portfolio is probably the part that most people focus on, but not the part that actually is the most controllable. I want to talk about something that is a little bit more controllable, which is gamma. And we're using Greek letters because we can. But this gamma really represents growth, generation, sprouting. That's the kind of the essence of, or the etymology of that word, if you will. And what I would like to say is that gamma is the income or the growth component, right? So when we start to add change in price plus growth or income generation, dividends being paid, interest payments being paid, any type of distribution from this asset that you purchase is going to be the income or the growth. And this is something that is actually pretty interesting. So, right, you purchase, last week I think we used Apple, so let's use Apple again. You purchase Apple. It's going to entitle you to receive a dividend of some sort. And the dividend payment is going to be whatever it's going to be every quarter or every month or however often it pays its dividend. That part, if we are going by the formula that we talked about, how controllable is this? Is this some control, no control, a lot of control? I'm going to argue that you have a lot of control over this. The dividend payments by different asset classes are usually stated. Now, granted, they can change depending on the market and depending on, when I say the market, I mean the economy as a whole. That may cause a company to reduce or increase its dividends based on profitability. But this is something stated. A real good example is probably the fact that when you're working, you are getting an income or a paycheck every 2 weeks or every month or so, right? You probably do get some type of raise in salary, but it's a little less predictable, right? It's based on a lot of different factors that you have absolutely no control over. You would hope that career advancement would do that. But at the end of the day, you do know reliably every 2 weeks or so, you're going to get a paycheck. This is very similar to the way that your assets should work in your portfolio. You should be trying to find assets that have a reliable income stream so that you can either spend the cash flow or reinvest the cash flow. And I'm, kind of foreshadowing a little bit of what we're going to talk about next week as we round up this series in uncovering the components of your portfolio's return. Because these components, if you think about it, versus the delta and the gamma, which one is the more controllable? The gamma is. And so therefore, when you're constructing a portfolio, you should be concentrating on the things that you could control. For instance, income, right? We can filter for what are called dividend aristocrats, or we can look for mutual funds that pay a higher or distribute larger amounts of their income or their profit or their net gains to shareholders. So these are all things that you want to be considering in portfolio construction. And again, if you need some help with that or you have questions around that, make sure you shoot me a DM or leave something down in the comments. But I am very, very happy to help you think about this in a very strategic manner, because as you start to monetize your portfolio, you get closer to retirement, you got a big amount in your 401k that you're going to roll over to an IRA. It's like, okay, so how do I take the income that could be potential, to be spent in retirement? How do I replace what I've been using in the workforce or during my career, right? How do I start to monetize my portfolio to kick off this income that I need? Okay, so those are some things to be thinking about, and definitely let me know if you have any questions. Been great talking to you. Have an excellent weekend, and we'll talk to you next week. Bye-bye.